Who is Warren Buffett? Why is he one of the best known investors in the world? And how can we be more like him as young adults? I'm Leah Leverich, a class of 2022 high school graduate exploring every path to success after senior year. A big part of that success is money. Not everyone has open conversations about finances with their friends or family, and most schools don't spend a lot of time preparing us. So these bonus episodes will provide you with basic financial knowledge and terminology. As you know, I have a very close relationship with my grandpa. He wasn't thrilled that I was working instead of going to college because he thought it would be harder for me to make a living. So now every time I see him, we end up talking about money. I value these conversations so much that I want you to hear them too. If you're feeling the pressure of entering the real world and need to know how to manage your finances in the simplest terms, let's explore our options together. It's our first day of class. This is Finance 101 on the Decision Day podcast. I think this is probably your favorite celebrity in the entire world, Grandpa. Who is Warren Buffett? Because I remember very vividly, I was in history class, we were naming the richest people in the world, and I was the only one who knew who Warren Buffett was. I thought this was common knowledge, but it's because of you. So, who is he?
Yeah, Warren Buffett, by all accounts, is the most successful investor of all time. From when he started in 1965 until 2002, I believe, a period of about 38 years, he had a compounded gain per year of around 25%.
Wow.
Now, we talked in the past about Rule 72.
Previous episode?
Using Rule 72, 25% a year gain, compounded gain, you're talking about doubling your money in less than 3 years.
Whoa.
Every 3 years, doubling your money.
So how did he do that?
We're not going to duplicate exactly what he does because he's got all the financial degrees and everything. He analyzes every company that he invests in.
That's his whole life.
Yes.
Okay.
He spends 5 to 6 hours a day reading. Just reading company data, financial data to see if that company is undervalued given the current stock price. And if he feels after analyzing all the data that it's undervalued, then he'll invest in it.
Okay.
He even buys the whole company also.
And he wants to buy it when it's undervalued. Why?
Yeah. Well, because if the stock price reflects the full value of the company, it would be considered, the full value. Or sometimes the stock price is too high for the value of the company. Essentially, the stock price times the number of shares available is the net worth of the company.
And when it's undervalued, it's best to buy it because you know it will reach its value eventually.
Yes.
So it's a good investment because it'll grow.
He
right?
feels it's a great business to invest in if it's undervalued. He doesn't want to buy something that's overvalued.
Because it's not likely going to grow, right?
Right.
Okay.
It's not going to meet those goals, that target. If it's undervalued, then that means essentially that the company is trading at a price level that is much less than the company is worth.
Okay. So he invests his money in undervalued companies, but is there somewhere that he invests his money that we can also invest our money?
Well, you can invest in his company, Berkshire Hathaway.
Okay, through the stock market.
Yes. There's two classes of shares, Class A and Class B. Class B is about $600 a share.
Ooh.
Class A, $600,000 a share.
Okay. So high schoolers aren't going to be starting there most likely.
That's why you're not going to invest in the Class A shares of Berkshire Hathaway unless you got an enormous amount of money.
But he's a good person to know about because he's is he like the king of all this?
Yes. And
Okay.
If you bought Berkshire Hathaway Class A in the 80s, you could have got it at $1,200, okay?
Ooh, okay.
Now that one share at $1,200 would be worth $600,000, just to give you a kind of a reference point.
How
of the type
ginormous.
of gains he makes.
Okay, so what makes him so successful and so confident with all his knowledge that he has?
As we talked about, he analyzes every single company that he invests in. You have to know and understand the company that you invest in. Given that most people, most of your target audience is not going to do that, they're not prepared, they don't have the
we're not there yet,
depth of knowledge, but you don't need to.
Okay.
Because the best kept secret is invest in the S&P 500 index fund. No money manager is able to beat that on a consistent basis. So that's all you have to do. Even Warren Buffett says, invest 90% of your holdings in the S&P 500 and 10% in short-term government bonds. I'll give you an example. In 2007, Warren Buffett offered $1 million bet to any money manager, hedge fund or otherwise, if they could beat the S&P 500 consistently over a 10-year period.
So the best of the best going against the best of the best.
Yes. So
in 10 years.
a hedge fund manager did take him up on that bet.
Okay.
And he lost. Okay?
Okay.
So Buffett won $1 million, given Buffett's overall integrity and everything. He did what was expected. He donated $1 million to a local charity
Wow,
organization.
that hedge fund guy probably quit his job.
Yeah, well, that goes to show you, see, that's the best kept secret. Why get involved with all these fancy financial systems when you could just buy the S&P 500 index? Of course, it's going to go up and down with the market. The market goes up, S&P goes up, the market goes down, it goes down, you lose money on the way down, you gain on the way up. As a matter of fact, if you're going to invest, you want the market to go down for like a number of years after you start investing while you're contributing to it, because you're going to keep buying more and more shares at a low price.
And it can only go up.
Yeah, well,
once it's
over
down.
time.
Yeah.
Over time. So if you get to buy a lot of shares when it's down and then it goes up, you're going to dramatically increase your profits.
So that's how you invest, like the best investor in the world, Warren Buffett. So what I remember you telling me, his daily habits and his daily life, being like top 10 richest people in the world. Doesn't he still live in his same house? What are his habits like?
Yeah, he lives in the same house that he bought in the 50s for around $35,000.
Wow.
Now, this is a man that his net worth is $135 billion. Okay?
Crazy.
He could buy a house every day.
Yeah. So he just kind of lives like the average person. It's
goes
his
to
mind.
McDonald's, Wendy's, things like that, but in the evening, a home-cooked meal at home.
So why do you think that has contributed to his success as well, that mindset?
Well, that's just his lifestyle. He's just humble.
Okay. How can high schoolers, what can they walk away with after listening to this? What tactics can they use immediately? We know about investing in the S&P 500, but is there anything else that Warren Buffett has taught us that we can implement into our lives as young adults?
Start investing as soon as you can. Warren Buffett started when he was 11.
Really? Yeah. How do you start when you're 11? Because you need to be 18 to open a brokerage account, right?
Yeah, but at that time, I think he's working with his parents and so on.
Okay, so work with your parents to open a brokerage account. It can be, I know my parents did this as well, with your help. The parents can open one if you're younger, still in high school.
They can open a custodial
account. So they open an account for you. You can start putting money in there, and then you won't have access to it fully until you're 18, right?
Yeah. Then when you're 18, you open up your own account. You transfer the money or convert the account from a custodial to a individual account.
Beautiful.
And start saving. Start early.
Okay, Grandpa, that's Warren Buffett, probably your favorite person in the world, most legendary investor so far. Anything else to add about him?
Yeah, here's some of the things that he advises investors on. He says, never lose money. Never invest in businesses you cannot understand. He says his favorite holding period is forever, once he buys a company that he's confident.
So the goal is when you buy it, keep it.
Stick with it.
We're not buying and selling like crazy.
Right.
Okay.
Yeah. Stick with it. Never invest with borrowed money.
Oh.
Be fearful when others are greedy. In other words, if everybody's going crazy buying the stock market, everybody's talking about it and it's going completely out of control, it might be time to kind of cash in a little bit.
Okay.
Put some cash aside so that, you might want to sell some really high flyers, at least a portion of them. Put the money aside for when there's a crash or correction, and then deploy that money back in. And be greedy when others are fearful. So when everybody's selling, then that's when you take your cash and you jump in and
when
invest
things
it
are
then.
Tanking, right?
Yes, then you get in. Never let a crash or a big market correction go to waste. Use that as an opportunity to jump in. That's where you're going to make more gains.
When everyone else is scared, that's when you know it's the best to get involved because it'll go up, right?
Yeah, well, you're getting at a better price. Buffett refers to that as, he's like in a department store. If they put things on sale, you're going to go and buy it, right? So you bought the same clothes yesterday. Now it's 50% off. That's how he views the stock market.
Oh, I I like that.
Yeah.
That's very tangible for young adults, high schoolers. Thank you so much, Grandpa, for sharing this knowledge with us about the legend Warren Buffett. If you want to start investing like him, take notes of this. It's really not as complicated as everyone makes it sound. What's the final takeaway is just invest as young as you can, right?
Yeah, as soon as possible, save some money, put it in, and let it work for you.
Let us know what you want to hear us talk about in future Finance 101 episodes. You can reach out at Decision Day Podcast on social media. If you want to talk to me specifically, at Leah Leverich on social media. You can email us, decisiondaypodcast@gmail.com. Anything that you want us to go over or figure out for you, do more research on for you, we'd love to share it with you back in the most basic terms so that we can all understand it as young adults. Thank you so much, Grandpa, and thank you to you for listening. We can't wait to share a new perspective with you in the next episode.